China matched the tariff increase, but the US pauses on retaliation, sparking renewed market optimism. Another extremely volatile week with the S&P rebounding from last week's crash, largely thanks to a 90-day pause on tariffs. The week opened with tariff negativity overpowering two early morning rally attempts. Monday finished just slightly lower despite an intraday high up 3% and low down 5%. Tuesday also ended red despite initially rallying on rumors of a 90-day tariff pause. However, that was sharply reversed after the White House claimed it was fake news. Of course, that wasn't true. The White House announced the 90-day reciprocal tariff pause on Wednesday, sending markets into a frenzy, rallying almost 10%. Lost in the euphoria, the White House also retaliated again on China with 125% tariffs that were later clarified to actually be 145%. Investors sobered up Thursday with markets bracing for an escalating trade war with China. The S&P gave up a good chunk of Wednesday's gain. Today was also very busy for a Friday with inflation data, earnings, and of course, more tariff updates. So as expected, China matched the US's tariff bump, retaliating with their own 125%. However, market optimism surged when the US, at least for now, appeared to stand pat and not continuing the tariff back and forth. The positivity was compounding by strong early earnings from banks and more positive inflation data. On the inflation front, both the CPI and PPI inflation growth continued to decelerate. However, given the tariff turbulence in April, the backwards-looking historical data carried a lot less weight now for future prospects. So what now? Well, first off, the White House not immediately retaliating was a good signal. It's not to say that they'll change their mind over the weekend, but it's the first sign we've seen of de-escalation with China. However, even if they did continue to escalate, it wouldn't matter much other than optics at this point. Why? Well, with prices between the two countries 1.25 to 1.5 times higher, trade is essentially already shut down between the two countries. Most businesses and consumers would already balk at that high of a price increase, let alone if it was higher. Regardless, this sets up an interesting week ahead. First, is this the start of some tariff reconciliation? We may start to get wind of some negotiations to reduce and remove some of the tariffs. However, on the other hand, it's also Q1 earnings season, and companies likely still have very minimal visibility at this point with the threat of tariffs still lingering. We tread cautiously with expectations this quarter, especially for forward-looking outlooks. I guess we'll see. See you next week.